Hollande after those election results as well, aren't they?
Yeah, misery compounding misery, I think, for the French president. There's three key figures to do with the French public finances being released today by the National Statistics Office. The first of which is the budget deficit for last year. It was 4.3% of GDP, higher than the government had expected and far off that European target of 3% that France needs to bring it down under by 2015. It's already accepted it won't be able to do that. But of course, a wider deficit means more debt. France's public debt also higher than expected at 93.5% of GDP. In European terms, that's not terrible. Actually, it's around the European average, but still cause for concern. Public spending, though, another very interesting figure, higher than expected, 57.1% of GDP. This will become really important in the coming weeks because the French government will need to have to decide how it's going to make another 50 billion euros worth of cuts by 2017. It's going to be a massive part of the French public budget. It's going to be very difficult for whoever ends up in the cabinet after this expected reshuffle. The other thing that we've got from the French National Statistics Office today is the figure for the economic growth in 2013, confirmed at 0.3%, which is better than in 2012 when growth was stagnant at 0%. But it's not a great picture going forward. There's no sign of this recovery. The French government badly needs to make things look a little bit better after that election defeat.
Yeah, indeed they do. Take us through what's happening on the markets then, can you, Stephen? OK,
we'll start here in Paris, first of all. No great reaction to that defeat at the elections. The Paris CAC 40 has opened up about 0.4% in trading today. A generally broad, in fact, positive start across the European markets. As you can see, investors looking ahead to a meeting of the European Central Bank, which is happening later this week. Over in Asia, things looking reasonably optimistic as well. The Nikkei up almost 1% when it closed, and the Hang Seng and Kospi also in positive territory. The only red spot on the horizon is in China, where the Chinese Premier promised on Friday they'd do their best to keep the economy from cooling down by more stimulus if necessary.
To Greece next. The Parliament there approving the reforms needed to release more funds from its bailout.
Yeah, Greece has now in fact received 90% of its bailout of almost 240 billion euros, but every reform passed through the Parliament is a battle. The latest debate on Sunday night saw heated exchanges, including the leader of the opposition Syriza party, accusing the government of selling the country piece by piece. Now, in exchange for those reforms passed, Greece will get 8.3 billion euros worth of aid from its international lenders, as Delano de Souza now explains.
Another painful vote for Greek lawmakers. After a lengthy debate, the parliament voted in favour of reforms required by the country's international lenders. Passing the bill qualifies Greece for the next round of its funds of around 8.3 billion euros. The vote wasn't easily won.
What you're trying to do is to sell off the country, piece by piece, to domestic and foreign interests in exchange for the support of creditors.
The new legislation will help speed up the privatization of state assets, including the country's two main ports. That's something the Troika has been demanding for years. The law also clears the way for privatizing the country's fourth largest lender, Eurobank. It's all part of the government's plan to get the country back on its feet.
We owe it to ourselves as citizens to work together for shared principles and values, to have fertile and constructive discussions, to plan a better future so that in 10 years from now we'll be one of the most culturally, politically and economically developed countries.
Greece has so far obtained 218 billion euros as part of its bailout, money that's keeping the country afloat. The latest round of funds will help Greece cover 9.3 billion euros of debt that's due in May. After 6 years, the country is expected to emerge from recession in 2014.
Let's move on now with a quick look at some of the day's other business stories. And Libya's sovereign wealth fund is taking the French bank Société Générale to court over claims it helped to funnel bribes paid to Colonel Gaddafi's son. The bank denies the allegations, which are contained in court documents filed by the Libyan Investment Authority in a London court. It wants a $58 million payment made by SocGen on its behalf to a Panamanian company to be declared void. The lawsuit is the latest to be taken by the fund over losses incurred from deals carried out during the Gaddafi era. And technology titans Apple and Samsung will be back in court this week for the latest round of their ongoing patent battle. Apple is seeking $2 billion in damages from its South Korean rival for allegedly ripping off its designs and features. The iPhone maker wants to be paid $40 per phone, which it claims uses its software. Samsung is expected to call engineers from Google to explain how they built the Android operating system independent of Apple.
Now, finally, if you've been paying attention to Stephen over the last few months, you'll know that 2014 has seen some really big business deals so far. But there is one sector which is really standing out, isn't it?
Yeah, tech and media. These are the companies we've really been talking about so far this year. And in fact, a study by Merger Market has shown the number of value of deals in this area have topped $174 billion so far this year. The highest it's been in 8 years, in fact, in that sector. The big deals we've been talking about: Comcast, the US cable operator, taking over Time Warner Cable, that was $61 billion. Facebook buying WhatsApp, that was another $16 billion. In fact, there were 346 deals worth over $5 billion done in this sector so far this year. There have been fears, though, of a tech bubble. Maybe it's going too far, but at least somewhere to put your money works for now.
Stephen will carry on, of course, bringing us all those deals every day here on France 24. Thanks a lot. Going to go to Nick now on the other side of the desk. He's concentrating really on that coverage of the political tsunami here in France. François Hollande and the ruling socialist